Good morning, everybody. Welcome back to the Opportunistic Trader. It is December
Yep.
20th. It is close to New Year's. Not many trading days left in the year. We've had a lot of activity. We're now joined by Phil Flynn of the Price Futures Group and Fox Business Contributor. How's it going today, Phil?
I'm doing great today, getting ready for another volatile day. Buckle up, and we're going to start having some fun.
Yeah, it's interesting. And typically this time of year, even starting, I'm seeing it's December 20th, only a few days trading days left in the year. Liquidity starts to dry up, and it's typically quieter markets. Now, obviously, we got a VIX right now of 26 and a quarter. So, there's, I guess people are at their seats opposed to going for holiday at this point.
Oh yeah, I mean, and you can't leave your seat because the volatility is so high, and things are changing minute by minute, headline by headline, which is a shame because I really think that the Fed could have calmed the waters yesterday, and I think initially they did. They were bringing a little bit of confidence to the market, but after Jerome Powell gave his little speech yesterday, he seemed to put the lack of confidence back in the market. I think he did a little more damage than good yesterday. Not so much with the Fed's action, but what he said about what the Fed was doing.
Right. So a lot to talk about there. We're going to talk energy, Fed. Let's start with Fed since you're already there. What's the sense of, Powell basically hiked rates and said that they're going to hike, he said specifically, we're not going to hike 3 times next year. We're expecting 2. That surprised the market. The market actually this moment has priced in about half a rate hike for next year. So that's above their expectation. But by doing that, my question to you more is doesn't that almost express confidence in the economy that the equity market right now is kind of doubting?
Yeah, I think it did. I mean, and if you saw in the Fed statement when they said, hey, our interest rate increases are only going to be 2 next week, even though the market was looking for 1, the market gave the Fed statement cred, street cred. It's like, hey, wait a second. They didn't kowtow to President Trump. They didn't kowtow to unprecedented pressure by outside market watchers. They stood the course. And they stood the course and said, hey, we're looking at the economic data. The economic data was the best it's been since the economic recession. We're not seeing a major problem with an economic slowdown. And heck, yeah, we're only going to rate. Yeah, we're acknowledging there's going to be some softening. We're going to pull back a bit. But and the market was respected that until the press conference. And that's where things started to unravel a little bit. This is why I get mad about this Fed transparency. They think
Right.
the more they talk, the better it is. They should have shut up after the statement. I mean, they should have just shut up and not said a word because the statement said everything you needed to say.
Well,
Then
that's
when they start,
exactly. We argued that. I'm sorry to
yeah,
interrupt, but we argued that
yeah,
exact point. It's almost like they're thinking they're adding all
yeah.
this added transparency, this and that. But at the same time, he's a beginner speaker, and everybody is. No, I don't want to say beginner speaker, but this is for one of the first few times on the Fed, and everybody's hanging on every syllable he says if you're actually speaking. Whereas you can plan out a text, which is what they do, and they release that. But when they get up there and kind of freelance it, that's more room for people kind of assuming different things about his text
Yeah,
or his comments, I should
exactly.
say.
Exactly. And I think one of the things he said that started to unravel it was when he first said the Fed's uncertain about the future path of rate hikes. It's like, wait a second. You just told us that you're going to raise rates 2 more times, but now you're uncertain about what you're doing. So instead of saying, hey, I feel confident enough to only raise rates 2 times, now you're telling me you're uncertain about that. So, what I took is swagger, and confidence. Now I take it as, well, we're doing this because we're expected to do it, but we really don't know if we should be doing it. So, in other words, that said to the market, we really don't know what we're doing. We don't know what we're doing, which is not the confidence that you needed to hear. I think the other thing, he had a question about, did the Fed, look at markets to make decisions about rates? And he basically said, we look at the markets, but we don't look at the markets basically to make decisions. It's like, well, which is it? Do you look at the markets and make a decision? Do you not look at the markets and make a decision? Well, we're aware of the markets. again, a confusing statement. Now, put it into the context of what he's saying. What he should have said is when they asked the questions about future path of rate hikes, say we're going to do two, but we're data dependent. That's what he should have said. It's the old standard line. The market could have lived with that. But in saying, well, we're uncertain about it because we don't really know what's happening in the economy, that's not what he wanted to hear. So I think that's why the market freaked out after the statement. But getting through all the noise and the panic, really, the preponderance of what the Fed was saying is actually true. The economy is in great shape, the best shape it's been. Unemployment is at full employment, right? Wages are going up. And if the economy can't handle a quarter point interest rate increase at this point in the cycle, then there's probably bigger problems in the economy than we want to admit. And so I'm hopeful that the market today is going to look beyond all that stuff and start to focus on the more positive stuff about what's going on and not be fearful of the next great recession. Because if you stay fearful about the next great recession, it's going to become a self-fulfilling prophecy.
Yeah. So here we are. VIX is trading 26.05. We traded basically 26.99 is the high overnight. Heading into year end, typically, like I kind of started out by saying, this is a time when volatility would drop, equity markets grind higher. What's the thought on A, VIX price and opportunities there, and B, triple witching tomorrow? Are you hearing anything from traders that could be affecting the market at the end of the day / tomorrow morning?
Not really. I think a lot of traders would like to hang it up, but I don't think they can because of the volatility. Believe it or not, the most interesting thing I heard was that we still could get a Santa Claus rally. And there's some interesting statistics. It really, the Santa Claus rally, everybody thinks it starts in the beginning of December, but it really starts after the holiday, after the 25th until the end of the year. And so once we get past maybe the options expiration, which is going to be the final, rendering of all the turmoil that we've gone through when it comes to volatility and the fear that we've seen in the marketplace, that maybe, thank God the market can start to take a rest, that we can start getting a little bit stable, and do what we've done in this economy for many, many years, is get that American optimism back, to say, hey, listen, there's a lot of good things going on with this economy. We've got a strong bank balance sheets. We've got an energy industry that potentially could be huge. It's a big part of the economy. We're the biggest oil producer in the world. We've got a lot of positive things going into the market. So maybe just get that little dose of optimism back in the market and erase some of all the pessimism that I hear. I really kind of get mad when I, hear these guys and they're so pessimistic about things, and they, these great calls. Maybe they're right. Maybe we're going into a great recession. Maybe the depression is right around the corner. But I do know this, a lot of the economy is confidence. And, if you keep telling people that the economy is terrible, they'll start to believe it, even though there's evidence to the contrary.
I just saw a pop-up on my screen that I got an email from you saying, "The Fed that stole Christmas." Nice,
oh, yes.
Nice title to your latest report, which you can check out on the Price Futures Group. And actually, if you're not already on the...
Instead of that, I would like to hear you sing that. Could you kind of sing that a little bit?
That's not in my contract.
Oh, okay, gotcha. All right, Larry, you got to pay him more money. What's going on there? Come on, pick it up a little bit. I don't know what's going on there. All right.
So let's shift over to oil. I see a headline coming out this morning. Saudi Arabia reportedly to cut production more than initially expected as part of an OPEC agreement. What's your thoughts on that?
I mean, this is OPEC and Saudi Arabia saying they're going to do whatever it takes. Remember Mario Draghi said that about the EU, and they put a bottom in the euro, save the euro currency. I mean, this is another statement by the Fed. And we've heard this from Saudi Arabia and OPEC before. Saudi Arabia, during the last price crash, oil minister Flynn came out and said, we're going to do whatever it takes. So this is Saudi Arabia sending a message to the market like, hey, guys, I know you're hearing stories that where our production is high, but if you look at our darn exports, look at the ships coming out of Saudi Arabia, you'll realize there's no oil on them, and now, these reports that we're producing a lot of oil, we're going to cut back even more. We're going to overcut. We're going to carry the load because we're not going to allow an oversupply to build in the market. The other story on oil was fake news was earlier this week. And if you remember, oil probably broke $1 or $2 off this headline that Russia's oil production hit an all-time high of 11.6 million barrels a day, which is a strong sign that they're not going to be complying to the OPEC cuts, and that there was a lot of consternation, and that Russian oil companies didn't want to join in on the cuts, and they were going to cheat on production. Well, within 24 hours later, Alexander Novak said it was ridiculous. Anybody that follows the Russian oil industry knows that they can't cut production overnight because the way their fields work, they're out in the cold weather. They can't just shut them down like other ones. So it's a process, and they were going to cut production. Then you heard from the Russian oil company saying, I don't know what they're talking about. We're actually on board with this production cut. We want a production cut because we don't want prices to fall any further. So it's amazing how you get these fake news headlines and market reacts to it, even though, if you're following it closely, you know that the headline isn't true. The other thing I want to talk about, and is demand. We keep hearing about this demand slowdown, and sometimes we're forecasting a potential future slowdown in demand. But, we broke a record yesterday for U.S. total demand again, and not by a little, by a lot. So the demand for U.S. petroleum products is higher than it's ever been. And while we keep hearing about, soft data in China, slowing data there, in other places, imports to those countries are still very strong. U.S. exports of oil near a record high. So listen, again, here we are, in the market. Should we be focused on the data that we're afraid is going to happen soon, which maybe the market's telling us it is, or should we look at what we're seeing right now, which is record demand?
Yes, a lot of interesting things, between energy markets, equity markets, volatility, fixed income, dollar even. The markets are really telling a different story. A lot of the different markets you take a look at, for instance, the dollar's weaker today. I think a lot of it has to do with positioning. A lot of it has to do with a lot of people suffering this year, especially in the last month. December seasonally the best month of the year, and we're getting crushed. And global markets are having a very difficult year. So repositioning for next year. But I think one of the bigger overriders for whether it be oil prices, everything, is the uncertainty around global trade and how that plays out. And there's just uncertainty, a lot of uncertainty when you're talking about the two largest major trading trade partners in the entire world.
Well, and I agree with that. That's a big part of what's going on. But we are seeing progress on that front. There's no doubt. Listen, I'm
yes
not
and
saying
no. Progress, but it's still uncertainty.
Yeah, it's uncertain. Yeah, you're right. I'll give you that. The market has a lot of uncertainty out there. We could have a government shutdown. Is that a big deal or a little deal? The market doesn't know. They're scared, right? Trade war, it goes on and on and on. Even though we see rays of hope that it could get solved, we absolutely do not know. But the good news is at least we're through the Fed meeting, and that was one of the uncertainties that we had. I just wish the Fed would have created more certainty, like they did in their statement until after the statement. But generally speaking, it is.
It's interesting, that whole added transparency. When you have algos and people hanging on every syllable that is said, the statement itself is thought out for 2 days. They can detail it. But when somebody freelances, you get a question from a reporter, you kind of go off tangent a little bit, and next thing you know, they're paraphrasing something you might not have even intended to say, and there goes S&P down 50, 60. It's funny, I was going to say yesterday, if somebody maybe tap Powell on the shoulder and say, sir, the S&P is 100 points off its high.
yeah Oh, and oil too. Oil was up. Oil dropped $1 after his statement too. No, I agree. Yeah, you're absolutely right. And then he was saying, well, we're really excited because we're going to have more transparency, more speeches, and so in other words, he's saying, according to your point, we're going to have even more volatility and even more crazy statements. So yeah, it is. And so yeah, I absolutely agree with you. I kind of long for the days when you had to look at the bank sales, from the New York Fed to find out if the Fed is raising rates or not raising
Right.
rates.
I was going to
I
say
mean,
that there was, now we're doing
yeah,
statements every month. There was a time when they wouldn't even tell you if they actually even hiked or cut or what they did. You'd have to just kind
yeah.
of look at the statement.
Yeah, and so yeah, I mean, and listen, I mean, I'm a big believer in transparency, but there's some things that are a little bit too transparent. Um, I mean,
Last thing I kind of want to get you out on is gold prices here trading 1265 or
yeah,
1264.40 all year. Really, gold traded very badly. We're starting to trade, 1200 held, then traded 1220, held that for a while, 1250. Now we're starting to move higher. Do you think the old adage of, gold being a safe haven, we have all this uncertainty with China, with trade, with a lot of different things. Do you think that gold potentially in 2019 is an asset that can appreciate based on the uncertainty, or
absolutely, I do. I think gold has got a bad rap, and the biggest headwind for the gold, of course, was the Fed raising rates, the rest of the world in turmoil, and when you're in a tightening cycle, historically, you don't want to be long gold because the market, the dollar is strong, and that usually doesn't bode well for gold. But for the first time, we're starting to see the volatility and all these uncertainty in the market, and then things start to move higher. So that really gives gold a little bit more of a boost. At the same time, the unraveling of the cryptocurrencies, which up until this year was viewed as a safe haven play for some investors, as opposed to gold, was a big situation that might even bode well for gold. I wrote a piece about 2 years ago that gold was the poor man's Bitcoin, right?
hmm.
It used to be that silver was the poor man's gold. All of a sudden, gold became cheaper than Bitcoin. Now, gold is more expensive than Bitcoin. I think, aren't we back more expensive? I don't know. Who knows? But I mean, everybody's buying Bitcoin, and that really was untested as a safe haven play. It really was. People thought, oh my gosh, gold can be manipulated by the government. If you do things on a blockchain and a computer, the government can't get their hands on it. But
Well, Bitcoin's had a nice run over the
yeah,
past few days.
few days it's come back. It is. So maybe both of them are getting their safe haven status again. It'll be
Yeah.
interesting to see.
All right. Well, I'll let you run. Thanks for taking the time on this volatile day. That's Phil Flynn of the Price Futures Group, Fox Business contributor. Thanks, as always, for joining us.
You got it. You're welcome. Thank you.